Sandeep, Mitesh, gentlemen, good morning. Thank you for joining us. Mitesh, markets are not going anywhere.
Well, you can say that for the last so many days, it's been a very, kind of futile attempt to possibly predict the direction of the markets. You've maintained that it's basically a rising channel, a narrowing range, and the counters are around levels of 6,120 to about 6,130 on the upside, and we've just, barely managed to touch the corners only once or twice in the last 8-9 sessions, while we have been kind of moving and oscillating around this mark of 60-50, 60-60 on the index. Yes, I think it's a very difficult situation to understand. I think given the fact that the volatility indicators are also settling down, I don't see a big movement happening in the next few days or weeks to come by. So I think till possibly we start factoring some kind of budget expectations, I think the market till for the first half of February could be extremely sideways, subdued, and in narrow range.
Sandeep, what is your sense? Do you think this listlessness is here to stay for a while?
Good morning, Aisha. Good morning, Nikunj. Absolutely. In fact, over the last few weeks, we have been saying this, and even in the last week or the last 3-4 days, I have been saying that this phenomena is going to continue or likely to continue even post the expiry. So it had got nothing to do with the expiry. I think for the next couple of weeks' time, as we run into the budget, it will be more stock-specific, sector-specific rather than the Nifty. And I don't think the Nifty is going to break 6,000 in a hurry in a big way. And on the upside, 6,100 as usual will be a very strong resistance, 6,100, 6,120. So we'll have to get used to this kind of a move, and with individual stocks giving you a lot of opportunities. And not only now, over the next few months or so also, we will have to be more stock specific. I think 2013 is going to be a year of stock specific moves, and one has to spot them.
So the thrust on the upside is missing and the force on the downside is also missing. Mitesh, before we discuss your Nifty strategy and your trading ideas, two stocks for you. One is large cap, other one is a mid cap. SR Oil yesterday was on a tear, and DLF of late has been a marked outperformer.
Oh yes, I think a very strong price and volume action for SR Oil. I think the stock moved up by about 13.5% with more than about 8 million shares being traded, which is about 5 or 6 times the normal traded quantity on this counter. So yes, on the NSE, the stock is clearly given a breakout. I think 95, 96 is where I think the stock will head towards in the days to come by. So there's still about 10-11% left in the price. DLF is a stock which we have been recommending for last few weeks. I think I've maintained a target of around 273, 275, which has been met and crossed. I think the next supply point comes in at levels of around 292, possibly 296. So that's the 3-4 rupee range where some kind of historical supply points are there. But if you look at the slightly longer term charts, the monthly charts, my sense is that even those targets can be taken, and the stock could possibly look at advancing beyond those levels as well. So if somebody is an investor, I think I would suggest hold on. I don't think now 250, 245 on the downside would be broken. 320 looks very likely in the next 6 to 8 weeks. And I think for traders, yes, you will have to take profits at levels of smallish kind of targets because the markets are not very buoyant as such.
Sandeep, two stocks for you, Asian Paints as well as ICICI.
Well, Asian Paints was a clear buy a couple of days back. That was a trading buy. But if you look at the weekly pattern also, it is showing some strength. At a level of 4,500, I would easily talk of a 4,680 to 4,700 target. But again, over the next 2 to 3 months will give me that comfort. If you talk of the daily move, I don't think 4,300 will be broken on the downside, and any move towards that, maybe 4,350 or so, would be an excellent opportunity to buy. So I am more comfortable playing this stock on a little more longer term rather than taking a trading call for a day or two. ICICI, no, yesterday after the results, it has been a big disappointment. I thought yesterday I had a buy call and I thought that 1250 would be taken out, but that did not happen. Having said that, on the lower side, 1160 becomes a very, very strong support. So at a level of 1191, I don't see 1160, 1150 being broken on the downside. So nearer that, it can provide a good buying opportunity. And the upside range is 1220, 1230. So 1150, 1220, 1230 is the range one has to play within ICICI for the next couple of weeks.
Well, numbers were not all that bad. But in the near term, it's all about expectation management. On the flip side, Punjab National Bank came out with a strong set of numbers. Expectations were low. Short sellers got trapped, and the stock really, picked up a lot of momentum, 912 rupees for Punjab National Bank. So the talking point on Thursday was PSU banks. We'll discuss some of those PSU banks, but right now, Mitesh, let's discuss your Nifty strategy and your individual stock ideas.
So on the Nifty, we aren't doing much. I think, it's basically waiting for the some kind of directional movement to happen. So I think Nifty is a status quo. No trade, no change for last 7 days. On the individual stock side, I've got a mix of buy and sell ideas. Financial technologies kind of broke below critical daily support levels of 1125 yesterday, closed below that. Can be sold with a stop at 1142 for a price target of 1070. IOC and all the OMCs, I think the medium-term charts are very good. We're just waiting for any short-term buy signal, and I think IOC gave one yesterday. IOC can be bought with a stop at 319 for a price target of 345. Jet, which has been kind of consolidating and has been failing to get past levels of 624, 625 to about 630. I think the overall pattern does suggest that a breakout might happen very soon. So buy above 630, keep a very tight stop at 618. Look for a fast or a short-term price target of 660. PNB is a buy, which obviously, with the kind of movement yesterday, is more of a signal that some kind of short-term up move has started. So buy with a stop at 893 for a first price target of 950. And Tata Motors DVR is a sell, which was a sell yesterday as well. Sell in the range of about 167 to 169. Keep a stop above 172.5. Look for a price target of 158.